How do you do, ladies and gentlemen? I'm your host, Seth Julian, welcoming you to today's Gulf Tadawul weekly briefing. And we're going to take a look at last week, we're going to take a look at this week, and try to get an understanding of the market. We are looking at the dot plot. This is a famous and well-known graph output by the Federal Open Market Committee, the Federal Reserve interest rate setting body. And what it shows us is each of the 12 members, or I don't know how many, 15 members or so, what their opinion is about where they think interest rates should be and when. So we see 21, they all felt it was zero, it didn't move. In 22, they begin quite seriously to feel that they're going to be raising interest rates, 23, 24, etc. Now, the key thing to keep in mind here is this. First of all, we're underway. The interest rates are going to be rising, and we're underway, and it looks like it's going to continue. The question is, how effective will it be? If interest rates rises do not arrest inflation, these dots are going to move into these dots in 22, and these dots are going to move higher, and vice versa. If the inflation is reined in by a fairly modest rise in interest rates, then we'll stop seeing rise in interest rates. So that's the main news from last week. We also need to take a look at the fact that China is slowing. The Chinese economy is definitely slowing because of their particular approach to the pandemic, which is zero tolerance, which has been proven largely not to work, and furthermore proven largely to severely retard economic recovery. So that's the choice that they're on. It's not working out so well, and they are paying the price. We also have the Olympics coming up, in which case they're going to be zero tolerance about lots of things, because they're a zero tolerance regime. Let's be honest about that. The earnings reports are continuing. We're well into earnings report season. And we see this week we've got some big heavyweights coming down the wire. ExxonMobil, Meta with the former Facebook, the big heavyweights, Alibaba, Amazon, Alphabet. These guys are reporting in this week. And the trend we have seen thus far, starting 2 weeks ago with the banks, and last week we had also some heavyweights, Intel, Boeing, ATT. Revenues are slowing down. The great return to profitability following the initial falls in 2020 are behind us, but the speed of those great returns is slowing. And so we see that we're likely to continue to see, a continued slowing down in corporate profits. Of course, geopolitical tensions are surely rising, and they're rising in the face of this tension. Let me show you a couple of maps. This map shows us the energy pipelines that traverse Ukraine. It's a busy map, so let me try and break it out for you. Here's the Ukraine. Here are the borders of Ukraine. Keep in mind, Ukraine is an enormous country. And you see the arteries of gas that run through the country. Now, one of Putin's goals is to squeeze the Ukrainians out of this market, because they clip a part of the price of the gas that moves into Europe, because by virtue of the fact that the pipelines run through Ukraine, and they were built under the Soviet Union, so the independent Russian Federation still has to pay the Ukrainian government to allow the movement of its gas through those pipelines. That's going to come to an end shortly. The Nord Stream 2, which is dead in the water, it's not going to be working anytime soon, is also going to see a constriction of, is going to further contribute to the constriction of gas prices in Europe. The other thing I want to show you, in terms of maps, is this map. This is a recent product of The Economist of London. It shows the location and force level of Russian troop numbers, and you see, it looks like a movement is about to take place where they take Kiev, they take the eastern part of the Ukraine, but maybe not. This is entirely speculation. It's not known at the moment, but what we do know is that this is a very serious threat that is being mounted. Our feeling here is that this threat is not likely to turn into a live, fire, hot war. Rather, it will induce the West to level severe sanctions against the Russian Federation, which in turn will be met with counter sanctions by the Federation, which will cut the gas off entirely to Europe and reroute it to China. We are of the opinion that that is the point of this exercise, that they're going to the Russians want to reroute the gas out of Europe into China, where they'll get higher prices for it on longer-term contracts, and be able to, in the process, throw their weight around Europe, intimidate their erstwhile satellite nations from joining NATO and the West. So this week we're going to see central banks making announcements. We've got the Reserve Bank of Australia, the Bank of England, the ECB, the European Central Bank, all coming through with their rate deliberations. We also see Amazon Alpha. We saw this before. Amazon Alpha, Meta platforms reporting out this week. It's going to be a big week. There's going to be a lot of volatility. And, of course, we have the Olympics starting. And leave us not forget that the Olympics have traditionally been a cover for a lot of monkey business around the world. Big-time shifts, big-time putsches, big-time grabs. All sorts of things happen during the Olympics because the world is snoozing. And it's a time where there historically has been a lot of upset and surprises. So it's a busy week. There's going to be a lot of volatility. We expect prices to be very, very volatile in the stock markets for sure. We expect the dollar to strengthen in the near term. And that's our outlook, ladies and gentlemen. So for all of us here at Gulf Tadawul, we wish you the ability to trade with confidence, ladies and gentlemen. Bye-bye for now.